Hi guys, welcome back to the channel. Today we're going to talk about something nobody likes to talk about, taxes. We're going to talk about three forms that are very important if you're investing, particularly in a taxable account, that you're going to need to have to be able to successfully file your taxes. Coming up next on the Firefighter's Financial Toolbox. Hi guys, welcome back to Firefighter's Financial Toolbox. My name is Brad. If you're new to the channel, subscribe to the channel. We've got a good community going here. If you enjoy the current content, give me a thumbs up. It really helps the algorithm. Today we're going to talk about three forms that you need to file if you have a taxable investment account. Now, when I say taxable, that means any money that you have invested after tax that is not in a tax protected IRA or your 401k. So for example, if you have an online savings account where you make interest, we're going to start there. Let's say you have an online savings account with an online bank, Ally for example. At the end of the year, you're going to get sent a 1099-INT. That's interest income that shows all the interest that you've made from that account for that year. Now, even if you have a checking account with your bank, anytime you make more than $10 in interest for the year, they are required to send you a 1099-INT. It shows all the interest income made from your account. Now, one thing to remember, if you have multiple accounts, for example, I have an Ally account, I have a Wealthfront account, I'm going to have to wait to get both of those forms from each individual company. Now, some of the things it shows: regular interest, so interest from a savings account, interest from a money market account. If you had any U.S. savings bonds or I-bonds that you cashed in, any interest made on those are also shown on this form. Now remember, each company is going to send you that. It's going to be sent from whoever that interest was made. All right, so that's the 1099-INT. Remember, any interest paid to you over $10 has to be reported. Now, you have to report less than $10, but they do not have to send you a 1099-INT unless you've made at least $10 for that year. Second one we're going to talk about is a 1099-B. Now, this is only for people that have actual investments in a taxable account. What this is this is going to show any short-term gains, long-term gains, or long-term or short-term losses. What this means is you've either bought some sort of stock or some sort of investment and you've sold it. Now, this also is going to show, if you remember, if you bought it and sold it in under a year, that's going to be a short-term gain or a short-term loss. If it's 1 day, 1 year, and 1 day, it counts as a long-term capital gain or a long-term loss. Remember, short-term capital gains are taxed at your ordinary income level, while long-term gains are taxed at 15 or 20% respectively, depending on your income, so they're lower. What if you bought a stock and you sold it, and then you turned around and you rebought that same stock before 30 days? That's called a wash sale. If you have any wash sale losses that the IRS is not allowing, that's also going to show up on this form. Basically, it's going to report all your losses and all your gains that you have for investments that you've bought and sold. So you guys, once again, if you have multiple taxable accounts, for example, I have a taxable account at Vanguard, I have one at Ally, I also have one with M1. I'm going to have to wait for all three of those to send me the forms if I've bought and sold. Now, remember, if you've only bought if you've only bought stocks or ETFs and you have not sold them, you've held on to them, you're not going to get this form until you actually sell. Okay. All right, let's talk about the third form. Third form is the 1099-DIV, the 1099 DIV. DIV stands for dividends, you guys. So if you're like me and you have some dividend stocks, or you have even ETFs pay you generally a quarterly dividend, and you have those in a taxable account, those are reportable. Now remember, there's two different kinds of dividends. There's ordinary dividends and there's qualified dividends. Qualified dividends get the same taxable benefit that long-term capital gains do. They're taxed at 15 and 20% depending on your income. Remember, up to about 400,000, it's for married filing joint, it's only 15%. So it's definitely cheaper to get those qualified dividends. This also has a site for non-dividend distributions. So if you have REITs that are paying you dividends, that's going to be reported on this form as well. Remember, REITs are taxed at ordinary income levels. So if you have any REITs that are in taxable accounts, this is where this is going to be reported. It also goes into if you have any foreign tax that is withheld on any of your accounts that you have in a taxable account. That's going to show up on this form. You guys, with all these things, if you do your own taxes, I recommend that you use one of the two big softwares. I use H&R Block Tax Cut. I use the Deluxe Edition, which is enough for me as a simple homeowner who has investments to be able to get his all done. And it's going to walk you through. When you get there, make sure you enter each individual form into the proper place, and it's going to walks you through it. If you use TurboTax, you do need to go to the Premier level for investments, which is a little bit more expensive. I do not have experience with that because, as I said, I use TaxCut. But remember, all these forms have to be entered. Now, most of these forms don't come out until at least the end of January, in some cases the end of February. So if you haven't seen it by, say, the middle of February, go online to the tax forms area of that brokerage house and find out when you can expect those forms to be available. Now, if you are using an online broker, a lot of times you have to download yourself. So you may get an email that says, hey, your tax forms are ready. You just need to go on there, download all the forms so that you have a copy of them. Some will send you a copy in the mail. Some will only let you do the download online. Either way, I download online because it's faster. I don't have to wait for the mail system. You guys, these three forms are very, very important for your taxes. Now, if you're somebody who has a sizable taxable account, let's say if you're into 5 to 6 digits and the interest income and the dividends combined become a significant portion, that's when you may have to look at doing some estimated tax payments so you could get yourself into a little bit of a pickle at tax time if you haven't allowed for the taxation that you're going to get hit with on your dividends and your distributions. Anyway, if you guys have any questions about this, put them in the comments. Remember the three big forms, the 1099-INT, the 1099-B, which covers all of your taxable, your capital gains and losses, and then your 1099-DIV, DIV, which is for all your dividend income that you make throughout the year. Anyway, I hope this gives you a little bit of insight into some of the forms that you may need to be thinking about for your taxes, and we'll see you again next week. Thanks a lot.